Welcome to Stock World, where we break down the latest financial news, market insights, and stock analysis to keep you ahead in the world of investing. First, a quick update on UnitedHealth stock. Right now, it's trading around $287 after hours, following a recent market dip triggered by Moody's downgrade. This move has certainly impacted investor sentiment. UnitedHealth Group, for those unfamiliar, is the largest healthcare company in the world by revenue. In fiscal year 2024, it generated over $400 billion in revenue, a figure that places it among the global giants. The company primarily operates through two main divisions, UnitedHealthcare and Optum. UnitedHealthcare provides health insurance and benefit plans to employers, individuals, and government programs, including Medicare Advantage and Medicaid. Meanwhile, Optum focuses on healthcare services like pharmacy benefit management, data analytics, and direct healthcare delivery. Now, when we look at the stock's long-term performance, it's clear that UnitedHealth has been a strong performer. Despite a recent rough patch, including a significant 50% decline over the past few weeks, the stock has still doubled over the past 5 years. This kind of growth isn't common, especially in the healthcare sector, which tends to be more stable and less volatile than tech or other high-growth industries. However, this recent drop highlights some of the challenges the company faces. For example, its medical care ratio, a critical measure of how much it spends on medical care relative to the premiums it collects, recently ticked up to 84.8%, a slight increase from last year. This suggests that medical costs are rising faster than anticipated, putting pressure on profit margins. Despite this, the company's operating income has still shown resilience, growing at a compound annual rate of 19.2% for UnitedHealthcare and 5% for Optum. But the bigger story here is the leadership change. UnitedHealth is bringing back a familiar face, Stephen Hemsley, as its CEO. Hemsley previously led the company from 2007 to 2017, a period during which UnitedHealth transformed into a healthcare powerhouse. His new compensation package, however, has sparked some debate. It includes a $1 million base salary, along with stock options valued at $60 million over the next 3 years. Notably, there are no performance targets attached to this package, which has raised some eyebrows. According to a company spokesperson, these options will only have value if the stock price increases. But without clear performance goals, it's unclear how this will be enforced. To add to the complexity, UnitedHealth is also under a criminal probe related to possible Medicare fraud. This kind of legal trouble can weigh heavily on a company's reputation and stock price, creating even more uncertainty for investors. Despite these challenges, there are reasons to remain optimistic about UnitedHealth's future. The company expects to return to its long-term earnings growth range of 13% to 16% by 2026, supported by its massive scale and market dominance. Additionally, UnitedHealth has a track record of adapting to industry changes and finding new ways to deliver value to shareholders. In terms of valuation, the stock's trailing price-to-earnings PE ratio is currently near historical lows, suggesting that the market may be underestimating the company's long-term potential. However, the road ahead won't be easy, especially as it faces rising medical costs and increased regulatory scrutiny. So, should you consider investing in UnitedHealth right now? Well, that depends on your risk tolerance and investment horizon. If you're looking for a stable, cash-generating business with a dominant market position, UnitedHealth is certainly worth a closer look. But if you're concerned about short-term volatility and potential regulatory headwinds, it might be wise to wait for a clearer turnaround signal. Thanks for watching my YouTube channel. If you found this analysis helpful, don't forget to like, share, and subscribe for more in-depth market updates. Stay tuned for our next video.